Okay, a little Nerf gun action, rolling around on the office floor, some yo-yos, and some Legos. All right. Hello investors and welcome back to Just Randy Stocks. During this video, I wanted to talk about AvidXchange, or ticker symbol AVDX, which is listed on Robinhood, and you might have gotten the notification yesterday. They hope to raise $506 million, and during this video, we're going to take a look at how they plan to use that money, and is this a good buy? Should you buy into this IPO, or should you wait and watch? Or is this just a really fun place to work? Or could it be both, a fun place to work and a good investment?
Fair warning for those of you that aren't familiar with the AvidXchange culture, we're going to be doing a lot of applauding. Is that cool? Okay, yes. See, get used to it. Get used to it. Shake it out.
So if you want to find more of those video clips, you can find them on the company's YouTube page. I thought it just really showed what type of culture and work environment they have to attract talent. If you're going to look at a business that's planning to grow, then what are they doing to separate themselves from the competition, especially in a market where talent is so hard to attract? So AvidXchange provides automated invoices and payment processes for mid-market companies spanning multiple industries or verticals, including real estate, financial services, energy, and construction. The listing price range is expected to be between $21 and $23. The final IPO price will be coming soon. It's expected to list next Wednesday on 10/13/21. Let's take a look at the company's mission statement. Our mission is to transform how middle market businesses receive, manage, and pay their bills. And if you're asking yourself, what is a middle market business? Basically, it's just the annual revenue, and middle market would be $5 million to $1 billion. So the company's solutions involve invoice automation software, bill payment automation software, purchase order automation software, and utility bill management. So according to a study by the Association of Finance Professionals, 42% of business-to-business or B2B payment volumes in the United States are still executed with paper checks. So what does this say about the business's growth opportunity? In the S1 filing, our market opportunity, in the second paragraph in orange, you can see current addressable market includes approximately 435,000 U.S. middle market businesses, and they estimate 20 billion in addressable revenue opportunities across both the accounts payable automation solutions and the business-to-business payment transactions on average per core customer. In addition to these business-to-business payments, they believe there's also a very large supplier invoice financing opportunity, and half that market is underserved. So both of these total addressable market opportunities, 20 billion and 20 billion, brings the total addressable market just north of $40 billion. So let's take a look at the growth strategy of the company. Let's take a look at their financials and then some of the risk, some of the things I think you should take into account before you put your money here. So their growth strategy in the S1 filing includes 6 elements, and I don't know if these are organized by their first priority to their last priority, but you have to assume that the first one listed is probably where they're placing more emphasis, and then on the last one, that's where they're placing the least emphasis. So they could all have equal emphasis, but it's just important to take these into consideration, that this is how the business plans on using the money, and this is why they're going public. Without public financial support, they couldn't do these things. And number one is transaction processed by acquiring new buyers and suppliers and increasing transactions processed between our existing buyers and their suppliers. It sounds like do your job. Number one sounds like, this is what we typically would have to do in the United States regardless. It's not till you get down to number 6 that they would have to do international expansion, and over in Europe is where they plan on doing this. So number 2 is paper checks to electronic payments, increase conversion. And that just sounds like do your job again. Number 3 is continue to innovate and enhance new products. Now, they have done a number, I believe it's 6, and we'll take a look at the timeline in just a moment. They've done 6 mergers and acquisitions, which is number 4 on their list. So they plan on doing more, and it looks like the way they innovate is actually buying other companies. I don't know that there's a lot of organic innovation within the company. They've got a huge focus on people, but the way that they innovate is by trying, and it's not always successful. I did find one merger and acquisition where it wasn't successful. They paid $14 million, and at the end of this year, they have to divest that portion of the business and enter into new verticals. Now, this is where I believe they are going to be successful. It does look like they're making it into the construction business. So let's take a look at the company's timeline. It starts off in 2000, where they did their first acquisition in 2014. There was 6 acquisitions, 2014, 15, 17, 18, and 2 in 2020. And that helped with the growth of the company. And then there was 5 strategic partnerships with KeyBank, MasterCard, Concur, RealPage, and Bank of America. All right, let's take a look at their financials. Now, revenues are derived from multiple sources, predominantly through software revenue from buyers and revenue from payments made to their suppliers. You can see there's 3 revenue streams here that are broken down in the S1: software revenue, payment revenue, and services revenue. And each of these, even in the 6 months ending in June 30th from 2020 to 2021, looks like a great performance that they're on track to outperform. And then from 2019 to 2020, it's trending in the right direction. You see these numbers look good. Here is where my concern is. So their overall net loss is trending up, and that's not the direction that you want to see unless there's a really good reason that they're investing into the business, into the people, and that appears to be what they're doing. But I would say after operating for 21 years in the United States and with plans to go over to Europe, how much more of these losses will you take before you get close to profitability? And it's difficult to understand when this business will become profitable. Okay, so the last thing that I wanted to look at, and this is on F30 in the S1, it talks about Company Music Factory and how they have this under lease, and it's got some cost embedded down here. And it looks like the Music Factory site is, part of what they've done to extend their footprint and appeal to the millennials. And I'm just curious if that's any kind of risk, and that lease, who's actually getting the benefit of that lease. It looks like a big ticket price, but you could see AvidXchange Music Factory. There is a whole list of play, work, and live. This is a massive area. I don't know if anybody's from the area knows more about this, but leave some comments in the comments below. That'd be great. Now, I went to the job search. I always like to look, okay, you're about to do an IPO listing. You've got these growth strategies. Under business development, in the last 30 days, does anything pop up that shows me anything that would lead me to believe there's any kind of international expansion? I didn't see anything like that. There's several job openings, but nothing that would really get me excited. Feel free to go to their job search and go into the advanced notifications and look here if you'd like. I also went into the press release for 2014. This was their first acquisition, and they had acquired this business that had over 20 years of experience. Now we're looking at a company that has 20 years under their belt, and they had over 5,000 customers. They acquired those customers. Just take a look at the numbers in the S1 and say, okay, if they had 5,000 customers, you should have acquired most of those. How much has your business really grown through the acquisitions that you've already done? Also, I told you about the YouTube page, and I just thought it was strange on this this is recent, July 26, 2021, there was a thumbs up only twice on this video. I didn't see anything wrong with it. I believe they're hiding their comments. There was 89 thumbs down. What is going on? Is there a red flag there? Also, in the Better Business Bureau, if you take a look at, there's an average of 1 out of 5 stars. There was 3 customer reviews. All of these were pretty recent. In the last 3 years, there was 2 complaints that have been closed and 1 complaint closed in the last 12 months. I would encourage you to go back and read those. Of course, when you're operating this big, there's always complaints, but there might be more there. It's worth taking a look if you plan to invest. And then in the last year, 5 compelling US-based accounts payable automation providers. They're listed in here. I thought that was good, but this space is growing so rapidly. If you go to something more updated in the last 30 days, there's 34 fintech payment processing companies. And if you scroll down, you can see they're not the only ones who are we pay your suppliers and you pay us type mentality. So this space has a lot of competition. That's all I've got. I hope you enjoyed the video. Don't forget to give me a big thumbs up, and I'll see you in the next one.